Hey everyone, I'm Bob Jablonsky. My firm's Bob Jablonsky and Associates, and we help taxpayers by filing their tax returns, finding legal ways to reduce their tax liability, and we also specialize in helping taxpayers who have tax problems. That's actually what I enjoy doing most. Today, I'm going to talk to you. This should be timely if you're about to file your tax return. If you are within your extension period, it's timely. And even if you haven't, it's good information to know. And that's why you should file your tax return, even if you owe the IRS. What happens when I work with taxpayers who owe the government? Quite often, they'll come in and they will talk about how they chose not to file their tax return. They're going to file all of their returns now because they have some more money, they're in a better place, and they chose not to file their tax returns at the time it was due because they didn't have very good cash flow. And today we're going to talk about why that's a really bad idea, and why you should file your tax return timely, even if you do not have sufficient cash flow. Well, as I mentioned, it's always good to file. If your return's due, file your return and face the music. What happens if you don't? Well, first of all, there's increased cost. The big one, 5% per month penalty for each month filed late with a maximum of 25%. What that means is after 4 months and a day, you now basically owe another 25%. So if you thought that $20,000 was bad, well, it's now $25,000, another 25%. The IRS actually considers filing late to be worse than paying late. The paying late penalty is 0.5% a month. So it's 10% uh, on a monthly basis of what the late filing penalty is. And it also maximizes at 25% a month. And just because you have the late filing penalty doesn't mean you're not going to get the late payment penalty. So you could end up having 50% tacked on to your tax debt for late filing and late payment penalties. And of course, you're going to get interest not only on those taxes, but on the penalties as well. And if you have to find someone like me down the line, the tougher, the more, the bigger the problem is, the more it's going to cost you. So get those tax returns filed. Another reason is the IRS only has 10 years to collect the tax debt. But if the clock doesn't even start ticking until you file your return and the debt is assessed, the tax is assessed because they get 10 years to collect it. If they don't know about it, the clock is not yet ticking. One other reason is the filing of a substitute for return, an SFR. What does that mean? Well, the IRS may end up filing a return on your behalf, and it's not going to be to your benefit. It's not an intentional way to get at you, but they have no information other than your income. They're going to give you the least appealing filing status. All of your income is going to be put on there. If you have a business, they don't know anything about your expenses, so you'll just have the 1099 income on there. You won't have any credits, things like that. So you're going to get basically the least appealing tax return you could have filed based on the information they have. And finally, in some states, in some districts of the Bank of the United States, bankruptcy is not permitted if you have a late filed tax return. So these are all reasons why you want to get that tax return filed on time. Well, can you do anything once you file it? Of course, there's always alternatives to resolve your taxes. There's a whole slew of payment plans based on your ability to pay, and you can find something that will fit your financial status at that time. The IRS will work with you within reason based on your ability to pay, based on your income and their allowable expenses. It's possible some people qualify for an offer in compromise, a settlement, but it's based on, once again, the ability to pay. So there's a calculation. The IRS has the final determination whether you qualify, but some people do qualify and they are able to settle their debt. Currently not collectible just means that based on your income and your allowable expenses today, you cannot afford to pay the IRS. And the IRS will do that and not garnish wages or levy your bank accounts. So once again, it's an option. Penalty abatement could be an option based on your circumstances and your history. Bankruptcy is an option for some, as we mentioned. If you file late in certain areas, like I work with taxpayers in Texas, they cannot qualify with late filed returns. So you want to be careful within your area. If you don't know those rules, you may be harming your ability to file bankruptcy in the future. And then there's always third party financing. Wouldn't you rather take a home equity loan against your property before the IRS files a federal tax lien against you. So at times, if you have the ability, third-party financing may be better than IRS financing. So hopefully you found this helpful. If you did, like the video so others will watch it. If you have a quick question, leave it in the comments below. If you're not a subscriber, subscribe today so you can get more information about your tax problems. Finally, if you need professional help, if you're looking for a professional to work with to resolve your tax problem, give me a call at 954-715-7285 or go directly on my calendar. It's in the description below. So hope you all have a great day. Thanks for listening, and we'll see you soon.